Hi, everyone. This is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. As we do each and every week, we show you the stocks on the screen that'll be featured in this recording. As a quick reminder, if there's a particular stock you're interested in, you can go directly to it using the chapters feature in this recording. All right, holy cow, lots to talk about. So let's get to the chart right away. Over the last couple of weeks, you've been hearing me talk about something called an ending diagonal pattern. If you're familiar with Elliott Wave, you probably are familiar with what that pattern is. If you're fairly new to it, you might not know exactly what it is. I've been showing it over the last couple of weeks, but here's just a quick clip that gives you a little bit of information on what an ending diagonal actually is. So an interesting characteristic of this bullish diagonal is when it becomes what's known as an ending diagonal, and it has a slightly different characteristic in that wave 5. Instead of the wave 5 ending at that upper trend line, an ending diagonal is oftentimes characterized by a blow off top. In other words, the wave 5 in that last zigzag breaks out of that upper trend line. You can think of that as FOMO, the fear of missing out, when people are like, oh, this pattern's moving to the upside, it's breaking out higher, I need to jump in. But in reality, it actually is signifying a likely correction coming at the end of the upper ending diagonal. So as you can see, typically when you have an ending diagonal, you have a little bit of a blow off top. We hadn't had that last week. We were wondering if this break to the downside here was actually the breakout of the ending diagonal pattern. And lo and behold, it worked exactly as an ending diagonal should. We did have this move down. You can see I've redrawn this lower line here of the higher lows to incorporate that move lower that happened on Halloween because that actually created another zigzag to the upside. So we have all these zigzags all converging, and we had originally talked about the fact that this could all occur right around the election, and that's exactly what's happened. So we have a 61.8% level there, a 61.8% level here, and 100% extension here. So three different zigzag extensions, all varying with their B wave corrections just to save time. That's where all the targets are. And they're all converging right around this 590 to 600 level. And it's hard to imagine getting to 590 without going to 600. And we touched 600 today. Just as a quick reminder, we are recording during market hours. So the actual closing prices could be slightly different than where we are right now, but we've reached 600. We've got that blow off top part. So we've satisfied all those segments of an ending diagonal. However, there's a fly in the ointment, and that's the fact that the Elliott Wave algorithm has relabeled this now into a wave 3. If you're familiar with Elliott Wave at all, you know every single impulse pattern starts with a zigzag pattern. Every 5-wave impulse pattern starts with a zigzag, and we've been talking about the zigzags, so you know they're there. But the fact that we've labeled that into a wave 3, the fact it's green means the algorithm thinks that wave 3 could still be going on. That's the one part that doesn't fully jive with the fact that this could be an ending diagonal and a correction coming. We're going to have the wave 4 at some point if we're in a wave 3. I didn't think we were going to have a crash in the markets anyway, but quite interesting that this island reversal that occurred on the election date. So we gapped down on Halloween, we gapped up after the election and ran up to the upside. And then there's one other piece to consider, and we're not playing politics here. It's just what history has shown in the data. The market has performed the worst when there's been one party in control of all segments of the government, the presidency and Congress, so both the House and Senate. It looks that way. The House isn't quite fully completed yet, but it does look like we're going to have the Republicans in control of all of them. And again, I'm not playing politics. It doesn't matter which party is in power. The market doesn't like it when one party is controlling everything. And you may ask, well, why is that? You might think, well, one party may be a little bit more in tune for business than another. That could be your personal view. But the reason for that is the fact that it does bring that uncertainty back in. Because when one party is controlling everything, they can get a lot more legislation passed. The market actually likes the gridlock thing because they know that nothing really of too much substance is going to get done. Little things here and there, but nothing too major. Now that brings into okay, whatever they want to get done, they're going to be able to push through since they're controlling all segments of the government. So that's something to keep in the back of the mind as well, as far as maybe a little bit of a correction mode. But boy, just patterns all over the place here in the market. And it's going to be truly interesting to see which of those plays out. So the final question here, and I know I've been long winded on this beginning, but I think it's been important, is when you have multiple different Elliott wave patterns that are qualified, which one becomes the confirmed one? Which one is the one that works? How do you know which way to go? Do you work for a potential correction coming up here, or do you work for moving higher? And the answer to that is you trade what the charts are giving you at the time. So as long as we're moving to the upside here, and as I put the moving averages on, one other thing to consider is we are getting just a little bit overbought here from the 10-day moving average with this vertical move. You know, I don't like gaps. I don't like vertical moves, and I don't like separation from the 10-day moving average. And we have all three. So it looks like the market at least wants to have a little bit of a quiet pullback. Monday's Veterans Day. The bond market is closed, but not the equities market. So that'll be interesting to see how the equities market trades without the bond market. We'll talk about bonds here in just a moment. But you trade what the charts are giving you at the time, and you just keep the other pattern in the back of your mind of, okay, if things change, I know exactly where things are going to go. And that's what I like about Elliott Wave. A lot of people say negative things about the haters say that, oh, it relabels all the time. I think that's the greatest thing about it, because the markets are dynamic. They're ever changing, and your indicators better be as dynamic as the market is, or you're going to be left behind and you're going to have losing trades while your indicators get in tune with the change in the market. So awful lot to talk about there on the S&P chart. Let's go to the VIX real quick. Won't spend much time here on the VIX, as you would expect with the big move to the upside in the markets. We're moving down in the VIX. Now we're right back down to this level of 15. You know, we've been between 15 and 20 here since early September. The range had been down to 12.5 before, and that's the question now. We're a little bit below the 10-day moving average on the VIX. So do we hold here at 15, which was the support level throughout the summertime, and to now, or do we break below that level, and then that would bring us back to a potential of 12.5 again, would then be support. So with the fact that maybe the market needs to do a little backing and filling at this point, that can perhaps be what occurs in the VIX. Maybe we hold here right at the 15 level. All right, I'm going to take a look at the bond market real quick. We'll take a look at TLT and interest rates. And when we take a look at interest rates, you can see that we had this move to the downside here. This has been quite interesting, I think, the bond market side of things, with the fact that President-elect Trump, for the official title now, has talked about tariffs. He's going to enact tariffs. That's going to import some inflation. What's that going to mean for the Federal Reserve? They did cut 25 basis points yesterday, as was expected. Are they going to continue to cut in the face of the fact that the tariffs will bring inflation up? You can make arguments over growth. And Rick Santelli, that I watch on CNBC, is giddy now about the fact that perhaps the administration that's coming into power, more pro-growth, can actually grow us out of the amount of debt, because he's been so concerned about the amount of debt. But it doesn't come without a little bit of pain. So going to enact these tariffs. If we're going to have more pro-growth for the U.S., then we're going to have to deal with that inflation. And will the Fed continue to cut rates as quickly as they had originally planned, with that aspect being brought in? And here's where the bond market comes in. You can see with the move down here in TLT, we're heading down. We're right down here to the 61.8% level. That's where the C wave was. And mentioned that we retraced to the previous fib level. That's what happens in zigzags. Could it move to the next level? And it did after the election, which was really kind of amazing. So we can bring this C wave down. We did have the extended C wave down to the 100% level, take the Elliott wave pattern off because that's become disqualified, move past the 78.6% wave 4. And so there's the completion of that zigzag. Now what normally happens when a zigzag completes, usually you go back up and retrace that previous C wave. So we should go back up to where the B target is, and that's where prices will go. This is TLT prices. Interesting, yesterday Jeffrey Gundlach, after the Fed was saying that he is a little concerned about the long end of the curve. And he doesn't feel like the Fed's going to be able to bring that down. And he thinks that the long end may go up. So if the long end goes up, that's why we're showing TLT for our bond market thing here. Again, a little longer on the curve. We show TNX a lot on the 10-year. And perhaps with the long end looking to head higher, maybe that cools the housing market just a bit. Another thing to consider. But right now, you should see prices continue to go back up here on TLT, which should bring rates down at least for the short term. So as prices were going down, rates were going up. Maybe we reverse that trend just a bit here. But it'll be interesting to see. Well, this isn't the 30-year, so it's not the full long end, but it's somewhere in between, which will be interesting to see how that plays out. Quick look at the dollar, which talked about how we ran up here. Then we looked like we were pulling back. I was like, okay, maybe the dollar just needed to have this big run. I mentioned that it doesn't normally do that. It doesn't usually run that far, that fast without some sort of consolidation, but it did. We started to pull back and we went right to 104, which had been the support and resistance area going back here to early summer through the end of the summer. And thought, just some consolidation through here would be great. And then I don't think it's that unusual to see that we had these weird spike moves in the dollar around the election. We'll see where that plays out. But I'd still like to see it consolidate right in this area here and perhaps move into a bit of a trading range for a while. I think that would be the most constructive thing on the dollar. And that would be logical if the viewpoint is with tariffs, you're going to import inflation, et cetera. But we don't want that dollar to go too high because then you start to add another whammy there on exchange rate problems for international companies. So that's why I'm saying I would like to see it consolidate through here, not necessarily take off. Yes, we want a good, strong dollar, but we don't want it too strong. That's where the problems start to come in. All right, so let's move over now and start talking about the international markets. And the FXI has gotten a lot of attention. We actually use the FXI as our case study consideration for TradeFinder this week. And while I'm talking about TradeFinder, if you haven't registered for it, you can see the link on your screen right now and register. It's free. We do it every Tuesday at 1 p.m. Eastern Time. We talk the markets, we look for trade ideas, and we have a live Q&A at the end. So make sure you register and join us for TradeFinder. We have a great community there. So this past week, we looked at the FXI as our case study consideration. And we had a big move to the upside there. So it was moving really well in expectations that China was going to add more stimulus. We had moved down in the FXI right after the election because they thought, oh, that's not going to be good for China because they're going to be getting more tariffs, et cetera. And then the view changed. Oh, but wait, that means that they will enact more stimulus. So we moved back up in anticipation of the government of China announcing more stimulus. Well, they did today, but it was disappointing. It was focused more on the government's debt, hidden debt, whatever that means, in China rather than more consumer based. They said there'll be more stimulus coming, but it may be into next year. So maybe we have to be a little more patient for a continued move to the upside in FXI. We'll see. We're right at the point of this triangle. So we broke out, we tested it. That's all classic corrective triangle type movements. So maybe we start to move higher once again in anticipation of further stimulus coming at the beginning of the year. Remember, the market always looks ahead, so that'll be interesting to see. I also wanted to show you the INDA real quick. It wasn't on the screen of what we're going to show, but this is a little bit of a bonus here because you can see that we are moving down below 55. I just wanted to show you that. We were trying to hold here at 55. We mentioned before, if we broke 57, we're coming to 55. We did. And then if we broke 55, we're probably going to 53. That looks like that's what's occurring right now as well. So maybe a little further movement down on the INDA and we get down to 53. Now, Jeffrey Gundlach said he really likes the way things look over in India, but I pay far more attention to what he has to say about the bond market than I do about the equities market. But just wanted to show you that. Looks like perhaps that's the next stop there on the INDA. All right, now let's talk about cryptos. And as I teased you last week, I said we're going to have a crypto expert, the smartest guy in crypto that I know, Brandon Burton from Digital Investor, is going to be here in just a moment to tell us where he thinks Bitcoin may go from here. He's showing you the chart of Bitcoin right now. You can see that we moved up big on the election. I think that was expected. If the Trump camp won, that's what Brandon was talking about, then we're going to have a big move because he's very supportive of crypto, actually wants to put some crypto in the treasury. Now, earlier in the year, he was calling 80,000 Bitcoin by the end of the year. We're almost there, Brandon. Where do you say he's going now? Thanks for being with us. Appreciate it.
Heck, yeah, it made a huge move. The election was great for us. Donald Trump, our first Bitcoin president, is now going to be our president-elect and going to be put in the presidency here in January. But where's crypto going now? Everybody's asking that question. We're watching the charts. The TA guys are saying it has to pull back a little bit. But let me give you some reasons why it's not going to. The House now is bipartisan. If we look here, we have our Stand with Crypto statistics. We have 219 pro-crypto candidates in the House. That's a win for crypto. Then, of course, just as you mentioned, we have the Strategic Bitcoin Reserve being proposed. Cynthia Lumens put her bill forward here. She's going to be buying 200,000 Bitcoin every single year for the next 5 years. This is insane. Not only that, just yesterday, IBIT put in a record $1.1 billion worth of purchases for Bitcoin on this chart here. I think that BlackRock buying Bitcoin and putting their money where their mouth is going to be exponentially more and more important as the days going on. But what is going to happen now is more and more companies are going to open their doors to crypto. The floodgates have now been opened. There is literally nothing fundamentally stopping crypto. Just like Elon Musk here, he's going to be most likely accepting Bitcoin for Teslas coming up here in the next couple of months. He said he was going to do so when crypto became economically and environmentally friendly enough to do so. And now we have SEC regulation out of the way. Gary Gensler's going to get fired. Thank you. Thank you. We're going to have no more bars on crypto. And then you got to think of the game theory behind what's happening with all of this. The United States just said, yes, we're going to support crypto. Donald Trump, in his Bitcoin conference in Nashville, said Bitcoin capital is going to be here in the United States. So now the rest of the world is going to be scrambling. And on the news, what do you see today? China talking about and reporting Donald Trump's plans to make US, the United States, the world crypto capital. That's a big deal because now everybody in every single country around the world is scrambling to see how they can get the political figures in place and make those moves to buy Bitcoin on their balance sheets. Bitcoin is not going to be stopped now. So I did predict $80,000 here at the start of the year, January, February, when you and I talked. We said Bitcoin's going to hit $80,000. It was at $40,000 then. We're almost there. It is not stopping today. Oh my gosh, it's reaching new highs obviously today as we speak, but nothing's going to stop Bitcoin now. Fundamentally, there are no bars on Bitcoin, and it's going to keep on going here, Rob.
I appreciate the comments, Brandon. Thanks. You've been spot on. If you like hearing this commentary, Brandon and I talk each week over on the Hub Financial channel. We talk all things crypto. So please join us there if you want to hear where things are going to go from here and more of the great content from Mr. Brandon Burton. So thanks again, Brandon. Appreciate it.
We'll see ya.
All right, let's move on and take a look now at UNG. So we'll take a look at natural gas. And it just doesn't want to give us a trade. Just sits here and doesn't want to do anything, right at 12.5. If it would bounce here, then we know that we're going to retrace the C wave and we go up to where the B is at 14.5. And if we broke 12.5, we can see where the C wave extension is down here around 11. The Elliott wave pattern has disappeared. That has relabeled as gone. So not there anymore. But we still have the zigzag rules that we could place a trade, but we got to do something with this 12.5 level first. And we'll have to wait and see how that plays out. Now, oil is going to be really interesting because, President-elect Trump is big on wanting domestic production. OPEC came out and they said, hey, we're not going to cut production. It's almost like they could see what was going to happen in the election. You really wonder about that because the fodder had been before that they were going to increase production. I always thought that was political rhetoric and meant nothing. Then they come out right before the election and said, no, we're not going to cut production, which I never thought they were, because they've said, and this is the part that I believe, that they want to make as much as they can with the amount that they have in the ground. They've done their geological surveys. They know that they're starting to run out of supply. So I never thought they were going to cut production. But now with the U.S. going to increase production, that's going to put more supply on the market. Everything is supply and demand. But if OPEC then matches all the excess production from the U.S. by cuts in the Middle East, it seems like it'll be more of a status quo thing. To me, I feel like oil likely is going to go into a large trading range here. We had this breakout of this ascending triangle. We moved back up. We tested it. I feel like we're just going to go sideways here. We never fully completed that triangle. It got pretty close. Now, I could be wrong. We could move back up and get into this area, and then you could look to extend this line over here, kind of what we did with that ending diagonal on the SPY, where you move as the market moves. And all you can do in technical analysis is analyze the data that you have in any given moment. If it changes, you adjust and move with it. And that's how you become successful over time. Don't get too caught up or married to any one thesis. You got to be ready to move if the market moves. So perhaps that could occur, and maybe we continue to move in here. We'll see. But it just feels like to me that perhaps a large, not a tight trading range, seems likely to occur with USL. Let's look at the metals real quick. We take a look at gold. And boy, gold acted odd around the election. On election night, it went down big, which surprised me a bit. And then we turned and came back up, and kind of somewhere in between today. So are we going to go all the way up and fill this gap? Was that just a reflex yesterday from the oversold bounce on election night? I find what's going on here really interesting with gold. And I think that's because gold is like, okay, yeah, we're not sure what's going to happen now with the Federal Reserve. Are they going to continue to cut rates as they were if we're going to have perhaps a bit more inflation with tariffs, et cetera, coming into the market? So I think that put a little bit of a pause in the bid on gold. I don't necessarily think that we're done going higher there, but I think that changed the game a little bit. And maybe we need to just kind of sit on our hands and watch a little bit in the metals. Same thing with SLV. Very similar patterns here, as you can see, down on election night and then back up and then somewhere in between today. So I feel like we're getting, let's use the Fed's favorite word, recalibrate. Recalibration on the metals now, as we may have a slightly different plan from the Federal Reserve on how much they are going to cut rates in the face of the potential increase in inflation. That's going to be wild to see. All right, now let's move to stocks of interest. And the first one that we want to take a look at is Tesla. Holy cow. Taking a look at Tesla, and, he was, Elon Musk was endorsing President Trump. And there was a comment not too long ago here on the U.S. market update of why do we still show Tesla? That's old news. And I think I mentioned last week or the week before, Tesla's back in the news again now. And boy, is it back in the news in a big way. And talking about the comments, it reminds me that to remind you, each and every month this year, we are giving away one of our level 3 subscriptions. It counts our time strategy, which is AI-based stocks that drop and then go sideways. We use counter spreads, butterflies, things like that to generate income. They're not directionally based. They're just designed to take advantage of time decay and IV drops, et cetera. Then we have the volatility strategy, which is the breakout of triangles, which I've already shown you many of those. Those are what are included in the volatility strategy, and the AI-based impulse strategy, which is our directionally based strategy, which has just been on fire since we started sending out alerts on this in September of 23. All those three portfolios combined, we call it level 3. It's worth thousands of dollars, and we're giving away one free every month. And all you have to do to be included in the drawing is leave a comment underneath this video. So please do that. Also, while I'm talking about that, hit that subscribe button if you haven't already. We're pushing up towards 50,000. Let's get that 50,000 number. Help us out. If you have a friend that you think might enjoy these, please direct them as well. We appreciate it very much. Thanks. All right, so back to Tesla. Now back in the news here, and they were talking about on the financial networks this morning, everybody wants a piece of Elon. And so now the best way to do that is Tesla. We are way overbought now. Obviously, there's viewpoints of some favorable things for Tesla with the fact that Elon was very supportive of President Trump's election campaign, et cetera. So, getting this big move, but gap up, vertical, the things that I don't like, too much separation from the 10-day moving average, right at the very top of the Wave 5 tap box. So the Elliott wave saw it coming, I guess. I don't know, but it called it as far as where we're going. But I do think that we need to rest here a bit on Tesla. Maybe some backing and filling is in order here. Be very hard to chase that move to the upside. I'm not saying that Tesla can't go higher down the road, but I think for the near term, we've probably topped out a bit, and a little bit of backing and filling is likely in the cards. I did want to go through and show you Netflix as well, because with Netflix, I mentioned that if the economy does weaken a bit, and we're still wondering about that with the bond market, the way the bond market's acting, it could be one of the rare times that we have an inverted yield curve with no recession, but I still think that's a possibility. And look, we had this breakout. I wanted to show you this because last week we had this triangle right here at the 100% level. We were wondering if we were going to break to the or the 61.8% level on the new zigzag, the 100% on the big one, and were we going to move to the 100% on the complex zigzag in that C wave? And we did. And we've labeled a wave 3 now. So it looks like Netflix may even go higher than this. So there's the breakout of that triangle that we thought was going to happen, and it moved right to that 100% extension. And now we wait and see, once again, a little bit of separation here. But you see that all over the map. Everything is separated from where the other areas are in the market. And then let's move into some of our other markets here in the U.S. with everything else combined. We'll look at the DIA, and these charts are all going to look very similar to what we talked about in the S&P. So we'll go quickly through these. Big move to the upside at the upper end of the wave 5, right at 100% extension. So maybe we need to rest a bit here after all this big stuff that we had. Is this a blow off top or FOMO? It's too vertical, too fast, and we'll have to wait and see if we just calm down, or do we start a little bit of a correction phase here in the markets. I think it bears watching. Looking at the Qs, if we look at the Qs, remember I mentioned, and I'm going to own it, I mentioned that if we completed that zigzag, I'd be surprised with where rates were, but we did. The election made it move to the upside, and there we go. We completed that C wave right to the 100% level. I wasn't sure that was going to happen with rates moving higher, but it did. And so there we are. We completed this C wave extension right here to the 100%, broke out of that triangle, false breakout to the downside, big move higher, right to the 100% level. We're only at a 45% extension on the wave 5 here, but just interesting. It's a wave 5 here on the Qs. Going back to the Dow, a wave 5, and then we look at the IWM, a wave 3, along with the SPY that's in a wave 3. So a little bit of discombobulation, if you will, on what's going on with the markets, as far as a couple in the wave 3, a couple in the wave 5. So there's going to be some coming together here. The patterns can be a little bit different for a period of time in the Elliott wave, but normally they do come back together. They had all come back and were the same. They were all sitting on the 50-day moving average, waiting on the election, as you know, if you watched the recording last week. And here we are with the Russell. The Russell's going to be real interesting to see with policies, et cetera, on whether or not we can move higher. Now, remember, 225 was the upper end of the range. There was that, and I mentioned it last week, it was a beautiful ascending triangle, better than the one on USO that was trying to form and didn't quite make it. But that is about as classic of an ascending triangle as you can get. The breakout was to the upside. Didn't have to be. Could have broken lower, but it broke higher. And so now we have this big gap up here. We are consolidating, but again, too far away from the 10-day moving average for my liking. I wouldn't even be surprised if the IWM is the first one to contract just a little bit, come back towards that 225 level, and test that to see if that is indeed support now. Are we going to create a new range? You know, the IWM, if you've been watching, likes 20-point ranges. That's what it's done for years. So is 225 going to be the lower end and 245 the upper end? That would make sense with consolidating right in the middle here. But you would expect a little bit of a move back down, test that level. It's got to test it at some point in time. It was resistance for too long to not be tested. So be a little cautious on going long the IWM just yet. Let's see if we get this test back down here and see how that plays out. So, holy cow, lots to talk about in this recording. Thanks for giving us some of your valuable time. Appreciate it very much. Look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.